Very good evening, friends. Just waiting for a couple of minutes. So very good evening to all the participants. So AFTP would like to welcome all the participants for the day 5 of the Ind AS course series. This has been a very long series with regard to 6 days, and today we are sitting on the 5th day, wherein we will discuss about the major issues with regard to the revenue as well as leases, that is the revenue recognition as well as the leases contract. So we are also pleased to inform that through the official gazette today, Institute of Chartered Accountants of India notified the revised Form 18, which shall enable us to function as a disciplinary partnership firms with other professionals such as CMA, such as company secretaries, engineers, advocates, along with us. A dream which was visualized by the council in 2008 has become a reality now, friends. This decision or this notification will definitely open up a window wherein a single firm can offer a boutique of services and create foundation for the global landscaping. With this, I definitely believe that the avenues for chartered accountants will increase, and we will stand handhold one by one with regard to competition with the other professional global firms. Now, we would like to inform all the participants that we shall be issuing the completion certificates after tomorrow's session, and the participants who have attended 10 hours of the course shall be issued the participation certificate. We have also uploaded the yesterday's recording on our YouTube channel, and the presentation has been uploaded on our websites for the sake of all the delegates, friends. As the president of AFTP, we would like to introduce AFTP once again. AFTP is a national level body consisting of chartered accountants, lawyers, company secretary, as well as CMAs. We have been divided into various committees such as audit assurance, insolvency, direct tax committee, indirect tax committees, as well as banking and finance committee. We are a team of more than 500 members and more than 250 executive members who are striving for the knowledge enhancement as the main objective of AFTP. In case anyone wants to become the member or anyone wants to be a part of the executive committees of the AFTP, you can directly pin me, or you can visit our website and fill up the form for the purpose of showing your interest. Now, again, I would like to invite CA Ayushi Gupta ji for taking up the session, for starting the session and introducing CA Abhishek Gupta ji.
Thank you, sir. As you all know that we are organizing Ind AS series in association with Gyan Baat and Webtel. So firstly, I would like to introduce Webtel. Webtel is a leading e-commerce solution provider which provides GST, TDS, TCS, and many more compliance softwares. It is also celebrating CA Week For this, it has collaborated with AFTP. So all the products of Webtel shall be available at a very discounted price to all our attendees. Now, I shall be inviting CA Abhishek Gupta ji. CA Abhishek Gupta ji is a practicing chartered accountant heading the Delhi branch of Messrs. B. Chocharia and Company since 2012. He secured All India Rank 1 in CA Finals in May 2012. He has varied experience in financial advisory, statutory audits, income tax consultancies, corporate restructuring, etc., and has core competence in accounting standards and income tax law. He has been involved in India's implementation in various companies. He has advised upon accounting and taxation on various real estate transactions as well. Welcome, sir.
Thank you very much, Ayushi, for your kind words.
Thank you.
At the outset, I would like to thank AFTP, Gyan Ki Baat, and Webtel for organizing such a useful platform, useful series of. I think they have Preetham ji has been involved starting from GST, then valuation, international tax, and now this Ind AS series. So, congratulations for organizing such a wonderful series. Special thanks to all the participants who are joining in numbers, and I have been following the series throughout from the first day onwards, and there has been a great participation starting from day one, wherein Sanjeev Singhal Ji took out time and enlightened all of us through regarding the Ind AS process and the entire thing. So today is day 5 of the series, wherein people who have been involved in since day one, उन्होंने starting from implementation, पूरी journey Ind AS की कैसी रही है. They have understood that starting from, and they have gone through various important Ind ASs as well, starting like Ind AS 2, inventories, PP के ऊपर था, Ind AS 16, and then yesterday session was taken on Ind AS 109. So today's topic, friends, for discussion is Ind AS 115 and Ind AS 116. 115 relates to revenue recognition and 116 relates to leases. So both are relatively newer Ind ASs if we compare it with the initial thing. Both were introduced much later. 115 was from 1st April 18 and 116 was from 1st April 2019. And almost all the companies are affected by both the standard, because revenue recognition and leases kahin na kahin sab jagah impact karta hi karta hai. Definitely the impact on a particular company would vary depending upon the industry it is into in, the business model it is into in. So I'll just share my screen for the presentation. I hope the screen is visible.
Yes, sir. You may continue.
Okay. So I'll try, because ये जो दोनों standards है and we have 2 hours in hand and time का जो constraint है, I'll try to capture more important issues. I'll try to share my experience last 4-5 सालों में जो Ind AS का रहा है, and then if time permit we'll try to take up questions. Definitely one thing I'll commit कि if we are not able to take all the questions today, moderators can compile all the questions, email it to us, and we'll get back to with all the replies. So we start with Ind AS 115, which is revenue from contracts with customers. Just to give you a background, it was effective from 1st April 2018 onwards. Go a little backward. It was initially when Ind ASs were notified by the MC in 2015. Ind AS 115 was also notified along with all other Ind ASs. However, IASB, International Accounting Standard Boards, decided to defer IFRS 15 by 2 years, and hence even our MCA took a call to so our just 1 second. Yeah, sorry for the disturbance. So when International Accounting Standards Board decided to defer IFRS 15 by 2 years, so MC also took a stand that Ind AS 115 would be implemented from 1st April 2018. Meanwhile, what they did, they notified two accounting standards, Ind AS 11 construction contracts and Ind AS 18 revenue recognition. Simultaneously, ICAI also came out with a guidance note on accounting for real estate transactions. When Ind AS 115 came into picture from 1st April 2018, both the Ind AS 11 and Ind AS 18 along with the guidance note on real estate transactions were withdrawn. So, and this standard Ind AS 115 is a comprehensive standard. One can imagine दो accounting standards और एक guidance note compile होके एक single standard में आया, and it's comprehensive to that extent that it tries to capture few specific situations as well. Generally जिसकी clarity पहले ICAI में या Ind AS 11 and Ind AS 18 में भी नहीं थी to that extent. The standard does away with the traditional concept of the transfer of risk and reward, जो कि अभी तक हम जितना भी ICAI पढ़ते थे, AS 9 पढ़ते थे, Ind AS 18 पढ़ते थे, हमेशा हमने एक टर्मिनोलॉजी कॉमन सुनी है, ट्रांसफर ऑफ रिस्क एंड रिवॉर्ड्स. उस पॉइंट इन टाइम पे हमको रेवेन्यू रिकॉग्नाइज करना है. This standard goes away with that traditional concept. What the standard focuses on, it focuses on a word called control. When the control of goods and services are transferred from a particular entity to a customer at that point in time, the revenue has to be recognized. Very, very clear principles how to recognize revenue. There is a 5-step model which we'll examine in detail. And there are significant changes which have been brought in recognition, presentation and disclosures. As you all know कि बहुत सारे disclosure requirements बढ़ गए. I remember the first session wherein Sanjeev Singhal Ji mentioned कि अगर हम Ind AS के सारे disclosures को अगर एक जगह इकट्ठा कर ले तो there are more than 3,000 disclosure requirements. So one can imagine the quantum of disclosure requirements which have increased. Now coming to the scope, so this Ind AS 115 shall be applicable to all contracts with the customers except few contracts, few situations which are generally covered by other Ind ASs. First of them being lease contracts, which is covered by Ind AS 17. Erstwhile it was Ind AS 17, now it's Ind AS 116. Insurance contracts, for which again there is a specific Ind AS 104. Revenue from financial instruments, other contractual rights and obligations, which are again covered by Ind AS 109, 10, 110, 111, 27 and 28. And then there's a fourth carve out which says non-monetary exchange between industries in the same line of the business. For example, let's say there are two oil companies, they enter into a contract wherein they do a non-monetary exchange. So one company exchanges oil with another company. So उस तरह के scenarios will also not be covered by this particular standard. Now coming to the next point is, अगर हम इस standard का heading देखेंगे, it says, I'll go back 2 slides, revenue from contracts with customers. So what is important here is the word customer. The standard is applicable only and only if the counterparty is a customer from an entity's point of view. Now, who is a customer? A customer has been defined as someone who contracts with a company or an entity to obtain goods and services which the entity perform in the ordinary course. अगर let's say एक manufacturing company है, cotton से yarn बनाती है, तो उसके लिए customers होंगे जो उससे yarn खरीद रहे. If that company, let's say, does a one-off transaction जहाँ पे वो कोई अपनी plant and machinery बेच रहे हैं, scrap कर रहे हैं plant and machinery को, so that will not be covered by this standard because that is not a customer, because that plant and machinery is not an ordinary activity of the company. It's not an output of the ordinary activity. The 5-step model now, which we are talking about, there are 5 steps in revenue recognition. Number 1, we will have to identify the contracts with the customers. Number 2, performance obligations which are inbuilt in the contract shall need to be identified. Number 3, transaction price has to be determined. Fourthly, the transaction price has to be allocated amongst the performance obligation. And lastly, revenue has to be recognized as and when the performance obligations are satisfied by the entity. प्रीतम जी, I'll request अगर आपको कहीं लगे ना थोड़ा स्लो डाउन करना है तो आप मेरे को बता दीजिएगा. I'll try to manage within the timeline. So coming to step number 1, identification of the contract with the customers. Now, friends, what is a contract? A contract is an arrangement between two people, two entities, which creates enforceable rights and obligations for both the parties. Contract can be written, it can be verbal, or it can even be implied in the by basis of the entity's ordinary course of activities. So for a contract, when we are identifying a contract, there are certain criteria which has to be necessarily present in that contract to qualify under this standard. Now, what are those criteria? Number 1, the parties. Let's say there are two parties, one is an entity, another is a customer. Both the parties have approved the contract and they are willing to perform their part of the obligations. Entity की क्या obligation है? Entity की obligation है goods या service provide करना उसको customer को, and customer का obligation है उसको अपना timely payment करना है. So both the parties should be willing to perform their respective share of performance obligations. Next point is कि through that contract, each party's rights are identified. Again, the entity's right is to receive payment, and the customer's right is to receive the goods or services which has been promised to him on the specified terms. The next condition is the payment terms has to be identified. The next point is commercial substance होना चाहिए contract में. Obviously, it can't be something without any monetary consideration or without a commercial substance. And lastly, the entity should have a reasonable certainty that it will receive the consideration from the customer. Customer का intent है payment करने का. If that intent is missing, if that reasonable certainty is missing, then that will not qualify as a contract, and वो first step itself में ही fail हो जाएगा. तो जैसे ही पहले step में fail हो जाएगा तो वो आगे के steps में हम आगे नहीं बढ़ेंगे. तो एक बार आपने कॉन्ट्रैक्ट को आइडेंटिफाई कर लिया, देयर कैन बी सर्टेन सिचुएशंस वेयरइन कॉन्ट्रैक्ट गेट्स मॉडिफाइड. मॉडिफिकेशन कुछ भी हो सकता है. देयर कैन बी चेंज इन द स्कोप, द स्कोप कैन बी इंक्रीज, स्कोप कैन बी डिक्रीज, देयर कैन बी प्राइस चेंज, देयर कैन बी मल्टीपल चेंजेस. Ind AS 115 identifies, and or rather I would say they bucket those changes into 3 categories. We need to see what kind of a modification it is, and on the basis of it we need to see under which bucket it falls, and accordingly the accounting treatment would be done. Now the first bucket is that whenever there is a change in the modification, and let's say the scope of the contract increases, and it increases in such a way that the price of the increased contract reflect the standalone prices, then it has to be treated as a separate contract. So to just give you an example, let's say एक कंपनी ने को ऑर्डर मिला है 50,000 यूनिट का at a certain price. Let's say at 100 rupees it has got a contract to deliver 50,000 units to a particular customer. 2 महीने के बाद वो कस्टमर आया, बोला जी मेरे को 25,000 यूनिट और चाहिए at 100 rupees ही for example मिलता है. So now that increased contract 50,000 का at the same market price, it is to be treated as a separate contract, and it is not to be clubbed with the main parent contract of the 50,000 units. So दोनों contract को हम अलग अलग treat करेंगे, and दोनों के उस हिसाब से accounting अलग अलग चलेगी. If this condition is not fulfilled, then it is not to be treated as a separate contract, and it is to be treated as an extension of the existing contract. Now extension of an existing contract में भी there can be 2 scenarios. Number 1 scenario is कि हमारा पुराना contract terminate हो गया, and a new contract has come into the picture. When it will be possible? Agar after a certain period, let's say the entity has delivered certain goods and services. After a while, the customer comes and he proposes a contract modification, and the remaining goods which are to be delivered under that contract modification is separate from the earlier modification goods which have been transferred prior to the modification, and in that case it will be treated as a termination of the existing contract and a new contract would be created. We'll come to the examples in the next slide. And if that is not the case, wherein the goods and services are not distinct, then we will do a catch-up adjustment. जितना हमने अब तक रेवेन्यू रिकॉग्नाइज कर दिया है, उससे रिलेटेड जो क्यूमुलेटिव एडजस्टमेंट करनी है हमारे को अकाउंट्स में, हमको वो क्यूमुलेटिव कैचअप एडजस्टमेंट करना पड़ेगा. So illustrations, all the three scenarios will come illustrations one by one. Separate contract का similar illustration जो मैंने अभी आपसे बात की थी. Let's say Mr. A contracts to sell 1000 units at 100 rupees, which is to be transferred after 2 months. And after 1 month, the parties modify to provide another 500 units at 97 rupees. Now here, there's a slight change from the example I gave you. Here, the 97 rupees reflect the volume discount. So if there is a volume discount, it generally represents the standalone prices, because obviously, if a customer is taking a certain volume from you, you are bound to give a certain volume discount as per the normal trade practice. So here that 3% is denoting a normal volume discount, and hence the contract of this 500 unit has to be treated as a separate contract, and both the contracts will be dealt separately. Now next example is wherein it is not a separate contract, but the old contract has been terminated and there's a new contract which has come into existence. If you look at the example, this is a service example. An entity has agreed to provide consultancy services for 3 years at a consolidated revenue of 4,50,000. So 1.5 lakh रुपए per annum का billing है, revenue है उसकी. At the end of the second year, the parties modified the contract as follows. The third year की fees, instead of 1,50,000, they agree it will be 75,000. And they extend the contract for further 2 years, saying कि for 2 years it will not be at the point wherein the modification is happening. The standalone market price is 4 lakh, but they extend the contract for 2 years at 3,50,000. So जो modification हो रहा है, it is not reflecting a standalone pricing. जो हमारा सेपरेट कॉन्ट्रैक्ट के लिए प्री रिक्विजिट था कि एडिशनल स्कोप आने से हमारा, एंड इफ दैट एडिशनल स्कोप इज रिफ्लेक्टिंग द स्टैंडअलोन मार्केट प्राइस, देन वी विल ट्रीट इट एज अ सेपरेट कॉन्ट्रैक्ट. दैट लिम्ब इज नॉट गेटिंग सैटिस्फाइड, एंड हेंस व्हाट वी विल डू हियर, बिकॉज इस मॉडिफिकेशन में क्या हो रहा है कि जो हमारे को एक्सटेंशन मिल रहा है 2 साल का, जिसकी वजह से मेरे को थर्ड ईयर के फीस में भी एक नेगोशिएशन हो रहा है प्राइसिंग फिर से. Hence it is to be treated as a composite contract, and hence we'll recognize this revenue of 4,25,000 over a period of 3 years. Now the third example is wherein it is a part of a existing contract. Taking the similar example, let's say there is a 3-year contract for 4,50,000 service render करना at 1,50,000 per annum. After first year, both the parties negotiate that the revised fee will be 2 lakh per annum. तो अब सेकेंड ईयर, जब फर्स्ट ईयर खत्म हो गया, जब हम सेकेंड ईयर में हम बैठे, तो ऑलरेडी हमने फर्स्ट ईयर में 1.5 लाख की रेवेन्यू रिकॉग्नाइज कर ली है. सो नाउ हियर वी विल do a catch-up adjustment of 50,000, wherein we will recognize this additional revenue of 50,000 in the second year as a catch up adjustment, and second year and third year onward 2 लाख रुपए की हम revenue account for करेंगे. Now coming to the second step, wherein we will once the contract is identified, now what we'll do, we'll identify the performance obligations which is inbuilt in the contract. Now this term performance obligation is a new term. ये इससे पहले के जो standards थे ICAI वगैरह में this terminology was not there. What is a performance obligation? अगर मैं common parlance में बात करूं तो so performance obligation is basically what is the obligation which the entity has to perform. Naturally entity का obligation यही होगा to provide goods and or services. So that's the performance obligation which the entity has towards the customer. Now whenever at the inception of the contract, we need to identify those performance obligation. We need to see whether there is one performance obligation or whether there are multiple performance obligations. कई बार क्या होते हैं, bundled goods and services होते हैं. उस bundled goods and services में there may be different goods and services which are not linked. So we need to identify those performance obligations की entity को क्या-क्या under a contract देना है, and whether the obligation of the entity is single or there are multiple obligations. So a promise to deliver good. So technically अगर हम technical definition पे जाए, what is a performance obligation? A promise to deliver good or service to the customer will constitute performance obligation if the promised good or service is distinct. Now how do we say कि एक contract में there are multiple performance obligations? I'll give you an example first. कि let's say there is a real estate company. Flat, it has contracted with the customer to sell the flat. Along with the selling of the flat, it is giving club membership charges to these customers in its club, common club. Along with those two things, it is also offering maintenance services that it will maintain the project after the units are handed over to the customer. And उसके लिए भी advance maintenance charges ले रही है उससे. And a lump sum consideration has been agreed for the entire bucket of services which the real estate company is giving to its customer. Now we can see there are three distinct services. One service is to deliver flat, another service is to give club membership, and the third service is to give maintenance. So अगर हम definition पे जाए, so तीनों को मैंने कैसे इसको identify किया कि तीनों अलग-अलग service है. If the customer can benefit from a particular good or service on its own, सिर्फ flat लेता है तो उसको flat में भी रह सकता है. It may or may not take the club membership or the maintenance service. So if the customer can benefit from a particular goods or a service on its own, then it is a distinct service, provided the entity's promise from the other obligations can be separated. So here in this example, I can definitely, the entity can bifurcate its promises. Maintenance is definitely a separate contract. It's a separate services which is to be rendered. Club membership is a separate service, and a flat is a separate service. So here in this example, these three are distinct services. If those, उसी similar way में, if we can bifurcate a particular contract, that bifurcation shall need to be done. If the obligations in a contract are interlinked in such a way that they can't be segregated, then it is to be treated as a single performance obligation, and we will have to see when that performance obligation is being satisfied. Coming to the examples, एक मैंने आपको पहले ही बता दिया real estate company का. A second example, let's say car dealer is selling a car with a assured 1-year warranty. At the same time, it is also giving an extended warranty of 2 years to its customer. Now, this extended warranty which the car supplier is given, as a customer, the customer has a choice whether he wants to take that extended warranty or not. So it is something which is distinct in nature, and customer has a choice to buy or not to buy that extended service. So here, whereas this assured 1-year warranty, it is something which is inbuilt in the vehicle and is more of a assurance service. So here, that car with 1-year warranty is one performance obligation, and an 2-year warranty is an extended 2-year warranty is a separate performance obligation. Giving you an example of a single performance obligation, let's say there is a retailer to furniture who is selling furniture. As a general policy, the company does not provide delivery service, transport service to the customers. But there is a particular customer who requested the retailer that the goods be delivered at his place, and the consideration for the same has been inbuilt, or I would rather say, let's say on the request of the customer, the retailer is giving it free of a cost. Now here, the service which the retailer is given for transportation is on the specific request of the customer, for which he is not charging any consideration as well, and hence it is a single performance obligation wherein the retailer's obligation will end wherein it has delivered that furniture to its customer. Coming to step 3, let's say once we have identified the contract, we have identified what are the performance obligation, whether there is one performance obligation, whether there are multiple obligations. The next step is to determine what is the transaction price, what is the price which the customer is going to pay to the entity for the goods or the service which he has promised to deliver. Now, if you look at the definition of the transaction price, it says that the transaction price is the amount of the consideration which an entity expects to be entitled in exchange for transferring promised goods or services to the customer, excluding the amounts which have been collected on behalf of the third parties like GST or any other indirect tax which the entity has collected. So now what is different here? Here the basic emphasis has been laid key the consideration which a entity would expect in a normal scenario. There can be few situations wherein there can be a variable consideration. We'll discuss each component one by one. So those typical scenarios have to be excluded from the transaction price for the purposes of recognizing revenue by the entity. ट्रांजैक्शन प्राइस में अगर मैं कंपोनेंट्स की बात करूं या स्पेसिफिक गाइडेंस की बात करूं, क्या क्या स्टैंडर्ड ने दिया है, देयर कैन बी अ फिक्स्ड कंसिडरेशन, देयर कैन बी अ वेरिएबल कंसिडरेशन. नाउ व्हाट इज वेरिएबल कंसिडरेशन? वन एग्जांपल इज लेट्स से देयर इज let's say someone has a sales based royalty, for example. That's a variable consideration because your consideration is dependent on certain factors. The second example of a variable consideration can be a volume discount or a sales incentive. So at the time, let's say when you are selling a particular unit or at the time of an initial contract, you have entered into a certain price. During the year, if that volume of a particular volume is breached, the entity says कि I'll give you a discount right from the unit 1 जो I have provided initially. So जब मैं इस unit 1 की भी accounting कर रहा हूँ, as an entity I'll need to estimate whether that discount situation would kick in or not. Again, based on my past experience, there will be certain judgments which need to be taken by the management, and based on those judgments that variable consideration is also need to be factored in. So let's say अभी मैं एक यूनिट बेच रहा हूँ कस्टमर को, entity is selling for 100 rupees, but it expects based on past experiences with that particular customer that eventually he will need to give a 2 rupees volume discount when a particular volume is breached. Then he should, at that point in time, he should recognize revenue for 98 only and not 100. There are various methods for determining or estimating this variable consideration. One is the expected value method. Another is the most likely amount. I'm not going into technical details of each method, otherwise will not be able to complete within the 2-hour window. So the organization will have to expect what is the expected value or the most likely amount, whose basis पे estimate करके at the time of recognizing revenue or determining the transaction price, will have to factor that variable consideration. The next item is financing component. Now what is financing component? कई बार क्या होता है कि एक transaction में, let's say in a normal trade practice, when entity ने customer को 100 रुपए में एक यूनिट बेचा in a normal trade scenario, and let's say the normal practice, trade practice also, or the company's policy is to give a 60-day credit period to its customer. Let's say customer B came to that entity and he asked for a 15-month credit period from her. Entity agreed, बोला ठीक है जी, आप 15 महीने का ले लो credit period, but price for you would be 105. So here we see that the entity is getting 105, not because it has negotiated for that product at 105, but it is taking that 105 because in place of a 60-day credit period, the entity is offering a 15-month credit period. So there is an interest component which is factored in that pricing. So in this case, the entity will recognize revenue at 100 rupees and 5 rupees would be accounted for as an interest income over the period of the credit which has been given to the customer. So the standard gives one exemption. It says, as a practical expedient, it says if the date from which the payment has been done and the date on which the goods and or the services has been delivered, if the difference between these two dates is less than 12 months, then the entity shall need not go into the concept of the financing component. That this concept will kick in only if this difference is more than 12 months. It can be either ways. It can be कि पैसा आपको काफी advance में मिल गया and you are delivering goods or service after 12 months from the receipt of the payment, or it can be vice versa as well. The next item is a non-cash consideration. Let's say entity, in lieu of the goods or services which he is giving to a customer, he is getting a non-cash consideration. So how do you determine the transaction price? The standard says the non-cash consideration has to be measured at its fair value. In case the fair value is not available, then the standalone selling price of the goods which is being sold will be taken. And the last item to consider here is, if there is a consideration, if there is a refund which is payable to a customer, now entity has to pay back to the customer for any reason, XYZ reasons. So you need to determine whether that payment is being done as a discount or as a refund for the consideration which the entity has for the goods or the services the entity has supplied to the customer, or there's a separate contract wherein, let's say, the entity is buying something from the customer and it's a purchase price for that. So that differentiation shall need to be done. Now once the transaction price is determined, हमने step 2 में performance obligations identify कर लिए थे, step 3 में transaction price determine कर लिया. Once both the things are done, we'll have to allocate the transaction price to the performance obligation. This scenario would not generally come if there is a single performance obligation. So whatever is the transaction price, that will be apportioned or allocated to the performance obligation. But this would come if there are multiple performance obligations in the contract. Now the standard says कि, let's say there are 3 performance obligations in a particular contract, and you have a composite price which has been agreed for those 3 performance obligations. So each performance obligation will have to be allocated a certain price, and that pricing would be proportionately to the standalone selling price of each particular item. So what do you mean by a standalone selling price? Standalone selling price is at the price which the entity would generally get if, instead of selling the 3 items together, if each item would have been sold on a standalone basis, what is the price which the customer would have generally paid? On that proportionate basis, the pricing would be allocated. There are specific methods which have been prescribed in the standard. One is adjusted market price method, wherein market prices would be taken, and based on those standalone market price basis, the allocation will need to be done. In case that is not feasible, then an expected cost plus a margin approach is the right method, because the cost which has been incurred by the entity to perform each performance obligation plus a margin, on that pro rata basis, the transaction price would be allocated. And the third is a residual approach. In case both the methods can't be used, then a residual method, any method which can on a fair basis can allocate the pricing. So we'll go for the residual approach only, and if only the above 2 methods fail. Let's see an example here. ABC here Limited enters into a contract to sell 3 products combined together for a lump sum consideration of 100 rupees to the customer. अगर हम तीनों का standalone price देखेंगे तो X का is 50 rupees, Y is 25, Z is 75. The total would have been, अगर all the 3 would have been sold on a standalone basis, would have been 150. But it is being sold to the customer for a lump sum consideration of 100 rupees. So we will allocate this 100 in the ratio of 50:25:75. So 33 rupees would be allocated to X, 17 would be allocated to Y, and 50 would be allocated to Z. And jab a particular thing would be delivered, the proportionate revenue would be recognized by the entity. The last step in that 5-step model is the recognition of the revenue. Once you have identified the contract, you have identified what are your obligations, you have determined the price, you have allocated the transaction price to the performance obligation. The last step which the entity needs to determine when it needs to recognize the revenue. Put it very simply, standard says जिस दिन performance obligation satisfy हो गया आपका, उस दिन आप revenue recognize कर लो. Now, when a performance obligation is said to be satisfied, a performance obligation is said to be satisfied when the customer has obtained the control of the asset from the entity. Friends, मैंने आपको पहले ही बताया था कि this standard emphasizes on this concept of control. It's a much wider concept. Risk and reward, the traditional risk and reward concept, is one of the ingredients of control. But we need to see whether or not the customer is getting a control and then the entity has transferred control or not. And how do we determine control, whether the control has been transferred or not? We can say control has been transferred when the customer receives the following rights on the asset. Customer has an ability to direct the use of the asset, number 1. Secondly, customer is in a position wherein he can obtain or if not all, substantially all the benefits from that asset. If the customer can exercise these 2 rights, one can say the control has shifted from the entity to the customer, and at that point in time, the entity's performance obligations have been satisfied, and hence the revenue needs to be recognized. Now, revenue recognition or this process of satisfaction of performance obligations can be over a period of time, or I would say जैसे हम common parlance में बोलते हैं percentage completion method. We have heard this terminology a lot under ICAI. Or whether the revenue is to be recognized at a particular point in time, which is again similar to contract completion method. So जिस दिन contract complete हो गया, performance obligations satisfy हो गए, at that point in time the revenue has to be recognized, or the revenue has to be recognized over a period of time. So the standard has laid down clear guidance when you will apply the percentage completion method. There are three scenarios. If either of the scenario occurs, then it is a case of satisfaction of performance obligations over a period of time. If all the three tests fail, then it is a case of satisfaction of performance obligation at a particular point in time. Let us understand what are those three criteria. And friend, this is the most important item, because the first four steps are relatively easier to identify, to determine. The most difficult aspect would be to determine whether that performance obligation satisfaction is happening over a period of time, or it is a point in time, and it will depend completely on the contract, on the specific contract between the customer and the entity. The first criteria, it says the customer simultaneously receives and consumes the benefits provided by the entity performance as the entity performs. जैसे जैसे entity is performing, it is doing its part, the customer is in a position to receive that thing and consume the benefit. One can say the service is being rendered over or the performance obligations are being satisfied over a period of time. Just to give an example, let's say there is a contract wherein a customer says, I need an X units of goods, 1 lakh unit of goods need to be supplied over a period of 3 months. And the entity is making dispatches in parts. 1000 unit एक बार जा रहा है, 500 unit एक बार जा रहा है, 2000 units going at a time. So as and when the entity is dispatching those, customer is receiving those goods, and it is also consuming the benefit of those goods. So as and when the particular service has been, when let's say 1000 good has been delivered, at that point in time, revenue has to be recognized. प्रीतम जी, अगर कहीं पे भी, if because see this is the most critical aspect, कहीं पे भी लगता है कि there are questions of all the participants, we can entertain, we can go a little slow on this particular aspect. This is the most critical aspect. So I would love if it is slightly more interactive.
Surely, sir. So Ankit, in case you can allow all the participants to put in their question, I think so. The participants can ask the question and put the question on the chat box, and we can take the questions simultaneously while the session is going on. So in case any of the participants is having any of the queries, so there is one question from Hitesh Dhingra ji: how to record the transaction price in case of a Zomato service?
Exactly क्या query है मैं समझ नहीं पाया हूँ यहाँ पे प्रीतम जी. Zomato service से क्या बोलना
चाह रहे हैं? I am just unmuting Hitesh ji. Just a second.
Hello.
Hitesh ji, yeah, Hitesh ji.
Yeah, sir. Sir, good evening. सर क्वेरी है कि सर जैसे जोमेटो पे हम जब बुकिंग करते हैं तो सर हमारा जो हम कस्टमर से 100 रुपीज लेते हैं, एंड जोमेटो चार्जेस, क्योंकि जोमेटो वाला अपना जब बिल देता है तो सर उसमें तो एक गुड जो हमने कोई भी फूड आइटम मंगाया एक तो वो प्राइस होता है, उसके बाद जो उसके चार्जेस होते हैं, उसके बाद जीएसटी रहता है। तो सर ये ट्रांजैक्शन हम कैसे रिकॉर्ड करेंगे सर जोमेटो वाला सर?
So you are asking, Hitesh, you are asking this question from a context of a Zomato or a context of a restaurant? Because
Sir,
if yes,
Zomato.
okay. So
Just like
Zomato,
the agent principle concept. Yeah.
absolutely. So agar, if I look at this entire transaction, what is the consideration which Zomato is getting? Zomato is getting its commission from the restaurant. The
Yes.
price which the Zomato is charging, that price, after deducting its commission, Zomato passes it on as it is to the restaurant. So here in this case, let's say 1000 रुपए का एक ऑर्डर हुआ, 1000 रुपए में टैक्सेस वैक्सेस सब जोड़ जाड़ के let's say 1100 रुपए जोमेटो ने कलेक्ट किए, out of which let's say 100 rupees is towards taxes and 1000 rupees is towards the food, and the commission of Zomato is 30 rupees. What will Zomato do? Zomato के लिए revenue तो is the 30% commission on the 1000 rupees. Is the 300 rupees is his commission. Zomato will recognize revenue for that 300 rupees. 100 rupees taxes which Zomato needs to pay, it will pay to the department, and rest 700 it will account for as a liability which is to be paid to the restaurant. I hope it answers your query.
Hitesh ji, are you there? So there is another question from Arvind ji. He has posted, yes, sir. He has, you have clarified, he has been clarified upon, sir. So there is one more query. What is the basis of revenue recognition for real estate companies? Suppose the project completion time is 3 years and which AS deals with work in progress. Earlier, we used to recognize based on completion and the stage-wise method. What is the new concept?
I'll come over that, because exactly that is the point which we are discussing now. Will percentage completion versus the contract completion. This is the concept, and real estate companies is one of the biggest sectors which took a huge toll on this, yes, because of the standard. Jab aaya tha, to it was a hot topic. I remember early 2018 प्रीतम जी would vouch it, जब वो मार्च अप्रैल में हमारे जिससे फोन करो यही बात होती थी, अरे यार इंडिया 115 आ रहा है, हमारा क्या implications होगा, कोई रास्ते निकालो. तो we'll come to that question, sir. Definitely we'll answer that. So
in case there is one question from Suresh ji. In case of courier industries, whether the revenue recognized will be on the basis of actual delivery or when the revenue will be recognized. In case of courier industries, recognized on the basis of delivery, or how the revenue has to be recognized.
So, sir, as courier company, what is the performance obligation of the courier company? The performance obligation of a courier company is to deliver its customers' good at the right destination. So once that and till the time that good is delivered at the destination, at the required destination, the obligation of the courier company is not fulfilled. So it once that is delivered, that is the right time wherein the revenue has to be recognized, and not when, let's say, customer ने hand over कर दिया packet courier company को, उसने bill फाड़ दिया, पैसे ले लिए. That is not the time when revenue has to be recognized, because वो तो हो सकता है वो अपने पास ही रख लिए. That material never gets delivered. So
absolutely, sir. So we have to see the performance obligation when he actually meets that obligation.
It's very clear, friends. We'll have to go step by step. We'll have to see each and everything. What is the contract between the customer and the entity? What is the performance obligation? What is the obligation which the entity has to perform to its customer? Then those pricing and all those issues have to come. So we'll have to go very step by step thing. Very clear cut guidance provided in the standard. That is why I told at the beginning only, it's quite a comprehensive standard, and जितना हम imagine करते थे, जितना हम सोच सकते हैं, वो सारी चीजों को इन्होंने compile करके एक standard में capture किया.
Okay, sir. So we can just proceed further.
So percentage method में जो first criteria which we discussed, the customer simultaneously receives and consumes the benefit which is provided by the entity's performance as the entity is performing. The second criteria is as and when the entity is performing, an asset is getting created, which the customer controls as and when that asset is being created. So for example, let's say a customer has given a contract to a entity to make a customized product for him, and the pricing has been agreed according to that customized product. And that customized product the entity is making just for that particular customer, and it is not something which it gives on a normal basis. उसकी जो design है वो भी customer ने दे दी है कि I need this as per this design. So as and when the entity is performing the contract, the customer is also controlling that asset. And if let's say it's a long-term contract, the entity can do a running bill, and based on that running bill, the revenue will be recognized over a period of time. The third criteria is what it says, and in the third criteria there are two limbs, and both have to be fulfilled, and that is why आप बीच में देख रहे हो there is an and which is highlighted. The first limb says that the entity's performance does not create an asset with an alternative use to the entity. Now what does that mean? It means that as and when the entity is performing, there is no alternative use to the entity for that asset. And the second limb of this particular point, it says that the entity has an enforceable right to payment for the performance completed till date. Now what does this mean, that the entity has an enforceable right to payment for performance completed? The standard says that, let's say once the contract has been initiated, midway, let's say without any fault of the entity, customer terminates the contract. Obviously if there is a fault of the entity, if it hasn't delivered as per the timelines or whatever as per which has been agreed in the contract, then this clause would not apply. But let's say there is no fault of the entity and the customer terminates the contract. At that point in time, the entity must have an enforceable right for the work which the entity has done till that date. Entity should be in a position to recover its cost as well as a normal profit which that entity would have earned in a normal scenario for putting in its effort till that day. If the entity has that right, then it can be said that it's a case of revenue recognition over a period of time. And if all the three criteria are not met, then it's a case of revenue performance obligation being satisfied at a particular point in time. Now coming to that question, Pitam ji, जो आप real estate से related एक gentleman ने पूछा.
Yes sir.
So real estate में क्या होता है कि अगर आप let us analyze a case of a real estate in all the three criteria. Everyone knows pre Ind AS, majority of the listed companies were following percentage completion method of accounting based on the guidance note which was there. Even in first 2 years of Ind AS, when there was Ind AS 11 and Ind AS 18, there was a guidance note on real estate accounting which was issued by ICAI. Majority of the entities were following that POCM concept. Now what happened when this Ind AS 115 comes into the picture? हम कंट्रोल के डेफिनेशन को वापस याद करते हैं. कंट्रोल क्या बोलता था? कंट्रोल बोलता था कि customer must be in a position to direct the use of the asset, plus he should be able to get the benefits out of that asset. So let us see real estate and under construction. We are talking about under construction real estate ka case wherein a customer has approached a real estate company, booked a flat. The entity has promised कि we will deliver you the unit after 36 months, and there are stages of payment with linked which is to be paid by the customer over a period of 36 months. Now if we see the first criteria, as and when the real estate company is constructing, is the customer in a position to consume or to avail the benefit of that unit. I'll prefer अगर आंसर आप लोगों से आए तो.
Anyone would like to give a shot? Any answer? No.
So no, under construction फ्लैट में तो जाके है ना कस्टमर अपना बोरिया बिस्तर सोफा ले जाके लगा नहीं सकता कि नहीं मैं तो रहता हूँ यहाँ पे. That's not possible. So criteria 1 fails. Second criteria is as and when the flat is being made, is the customer in a position to control that asset? It is definitely creating an asset. It is creating a work in progress. But is that work in progress being controlled by the customer? I can see a lot of no's coming in. Correct. So obviously just one construction, whenever it is happening, the customer is not in a position to control it. Third limb is the most important limb from a real estate company's context. The entities now, and again, third number criteria, we'll see both the limbs separately. The number one limb, first limb, which says the entity's performance does not create an asset with an alternative use to the entity. So the real estate company, the customer has booked a particular flat. Now, does the entity has an alternative use for that entity, for that particular unit? Can it sell that flat to somebody else? The answer is no. So that flat cannot be sold to any other person other than the customer who has booked that flat. So the first limb is satisfied here, that entity's performance is not creating an asset with an alternative use to the entity. But now we have to see whether the second limb is satisfied or not. Entity has an enforceable right to payment for performance completed till date. Let's say customer पैसे दिए जा रहा था, company construction किए जा रही थी. Once the 60% construction was done, the customer approaches the company. It says, I am not in a position to continue with the contract. I am terminating this contract. You please refund my money to me. Can a real estate company at that point in time say to the customer that I have constructed 60% of your flat, so the cost which I have incurred on constructing that 60% plus a normal my profit margin, I should be entitled to? Can that real estate company say that to its customers? क्या व्यू है आपका अंकित जी, पीतम जी? I am seeing few mixed answers on this. Few yes, few no in the chat box. So from a real estate context, and also with the advent of Real Estate Regulation Act in the country, which monitors this real estate transactions and regulates it, this is not possible. No company can generally say that I have constructed 60% of the flat, I am entitled to that 60% payment plus a profit margin. It is not permissible under RERA generally. Let's say अगर किसी so that limb, this limb is not satisfied, and hence all the three criteria for a real estate contract to be recognized, revenue to be recognized over a period of time fails. And hence is the case that a revenue from a contract by a real estate company is being recognized at a point in time, and this is the accounting which is being done by majority of the listed companies now. if any company, let's say, goes beyond that, let's say रेरा के beyond जाके एक बार ignore कर दे हम रेरा के provisions को, उसने contract में फिर भी ये चीज लिख दिया है अपने contract में कि customer जब भी flat cancel करेगा, I'll be entitled to the cost which has been incurred by me till that date plus a certain profit component that is been written in the contract and it has been agreed by both the parties. Then definitely that real estate company can do revenue recognition over a period of time. But that is again a theoretical discussion. It is not something which can happen in reality now with the advent of RERA. And hence, if you look at all the real estate companies, if you pick up balance sheet of financial year 2018-19 of any real estate company, listed real estate big company, you will see a huge reversals which have been done by them in their retained earnings. And hence was the discussion early 2018 mein on the impact of Ind AS 115 on the real estate contracts. Now moving ahead, like we discussed, if the three criteria is not fulfilled, then it is the case of a revenue recognition at a point in time. Now, when we say a point in time, the first question which comes in that mind is what is the point in time? जैसे वो courier वाले एक example में किसी ने पूछा था कि what is the point in time of revenue recognition? So there are few indicators which says point in time is very simple. When the performance obligation is satisfied and the customer has obtained the control of the promised good or services, that is the point in time wherein the revenue has to be recognized. It's not an exhaustive list. There are few indicators which says when you can recognize what can be an point wherein one can say the customer has obtained a control. Let's say the entity has a present right, it can claim payment for that asset. Customer has got the legal title, physical possession has been transferred to the customer, significant risk and reward has been transferred to the customer. So one can see significant risk and reward is just one of the indicators and not the only indicator for revenue recognition. And customer has accepted the asset. So these are the few indicators which are given in the standard while one needs to consider while determining the point when the customer is obtaining the control of the asset. So this was all about recognizing revenue 5-step model. There are few other concepts which have been discussed by Ind AS 115. I will quickly run through those things and then we will move over to the next standard, which is Ind AS 116. Now this is one concept which has been given in the standard is the incremental cost of obtaining a contract. Again, this concept was not clarified in ICAI, which has been brought in by this particular standard. It says that if there is a cost which an entity is incurring specifically for obtaining a contract, so अगर वो contract नहीं मिलता तो वो cost नहीं होता, अब contract है तो वो cost है. Like a best example is a sales commission. If the sales is happening, then there is a sales commission. If that sales is not happening, that is not a commission. So the standard says that incremental cost, if the entity expects to recover those costs, then it has to be recognized as an asset and it is to be charged off to the profit and loss account on a matching concept. So जब revenue recognize होगी उस particular item से, तभी उसका ये corresponding खर्चा भी recognize होगा as an expense. Till that time it will be taken as an asset. Then Ind AS 115 also gives specific guidances on typical cases of warranties, sales with a right to return, non-refundable upfront fee, licensing, consignment agreement में क्या होगा, किस तरह से treatment होगा. So these are all specific cases which may be applicable on certain entities, which may not be applicable to certain entity, but it provides a clear guidance on those specific aspects. Coming to the transition, initially all the companies went through the transition phase on 1st April 2018 when they switched over to Ind AS 115 from Ind AS 11 and 18. And future में भी कभी होगा तो this transition would have to be done. Let's say an entity might not be having Ind AS initially, but now they'll be having Ind AS. So this is the transition method, which it says there are two methods of transition. One is the retrospective method, full retrospective method. So we will use the principles of Ind AS 8, change in accounting policy, wherein it says that entity has to use it as if Ind AS 115 was applicable since the beginning on the entity, and hence it will need to restate the comparatives, and it will also need to create a prepare a third balance sheet. जो Ind AS में बोला हुआ है, Ind AS 8 में बताया हुआ है. In a general case also, whenever there is a change in accounting policy, that accounting policy has to be implemented as if that accounting policy was always there. So there will be a third balance sheet in the beginning of the reporting period. Any adjustment shall need to be done on the opening reserves of that third balance sheet, and previous year periods would also be restated to make the financials comparable, both the years comparable. That is the retrospective method accounting for transition. The second option is the cumulative effect method, which says that whenever the standard has been applied, you determine as if the standard was always there. That concept still remains. The standard was always there. So whatever is the impact due to application of the standard since inception, whatever is that impact, you take it into the opening reserves on the date of application, and you don't restate the comparative period. So let's say 1st April 2018 को आया था जब ये modified retrospective approach भी बोलते हैं इसको. Majority of the companies followed this modified retrospective approach. 1st April 2018 when the standard came, taking example of a real estate company, a lot of real estate companies, when they switched over from a percentage completion method to a contract completed method, what they were required to reverse the profits which they had accounted earlier on a percentage completion method. So that reversal they did in the retained earnings on 1st April 2018, and hence the results of financial year 18-19 were not comparable to the results of financial year 17-18, and that a proper disclosure and proper detailed note was given in those balance sheets. So this is the method which has been generally followed, but some has done use the retrospective method also. Now these are the disclosure requirements which one needs to give. Increased disclosure requirement as compared to earlier standards. We have discussed that at variety of places you need judgment. Those judgments which have been taken needs to be disclosed, and there are a lot of qualitative disclosures as well. There are quantitative disclosures as well. I am skipping this aspect due to paucity of time. And just before moving to the next standard, we have tried to just give you a very small real life example, couple of real life examples which can help you to ponder upon those thoughts ki jitna humne padha usko kaise application hai. As I said you earlier, one of the important sector which took the major hit due to this standard was the real estate sector. I remember there was an article also in early April 2018 of ET wherein it was mentioned that just the real estate companies, because of this standard coming into effect, and they have on account of switching over from percentage completion to a contract completion method, there will be a reversal of 20,000 crores profit by the real estate company. This was a number just for listed real estate companies. Unlisted, जहाँ पर इसका impact आता है, obviously who are following Ind AS, the numbers are still unquantified. मतलब you can, if anyone has interest, one can go look up search the balance sheet 2018-19 listed companies. DLF had a reversal of 4,000 odd crores. Godrej did a reversal of I think 1,000 odd crores. So all big listed companies running into few thousand crores of reversal of profit, which impacted their net worth substantially. So this is one important aspect. Timing of revenue recognition one needs to see in real estate, whether it's point of time versus over a period of time, which is based on the contract. Second important area one needs to really see in a real estate contract is the identifying the performance obligation, whether there is a single performance obligation, whether there are multiple performance obligations. And the third important item one need to consider in a real estate contract is a financing component, whether there is a financing component element involved in or not. Just to give an example of where there can be a potential financing component, let's say there's a normal pricing policy of a company कि construction linked plan hai, based on certain construction milestone, this is a pricing. Let's say 5,000 rupees per square feet is the pricing. If a customer opts for a normal construction linked plan and he gets possession after 36 months and he makes payments over a period of time. However, a customer comes, he says that I want to opt for a down payment scheme, I want to pay upfront, and the entity offers him a rate of 4,500 for making payment upfront and taking the possession after 3 years. Now here definitely there can be a financing component involved, because here he is making a payment 3 years before, which breaches that normal practical expediency carve out which has been given in the standard. And one needs to examine if there is a financing component involved there, that 500 is a discount which is being given or nothing but an interest component which the entity is giving for receiving early payment. Then the entity will recognize revenue at 5,000 only, and a 500 rupees discount will be accounted as an finance cost or an interest expense in the books of the entity. So these are the few key areas which might impact a real estate company. Another industry we will have a look is the automotive. Again, वहाँ पे 3-4 important considerations है which we need to see. Is again determining performance obligations कितने हैं. We saw an example of warranty earlier as well. Extended warranty दे रहे कि नहीं, so whether that is a performance obligation separate or not. It is very common when you go to buy a car, you get a lot of spare parts, sometimes free of cost, sometimes for a lower valuation. So we need to bifurcate those spare part obligations as well, whether it is part of the main obligation to give a car, or it is something which can be additionally purchased by the customer. Again, there can be a component of variable consideration which is very common in auto industry. OEMs gives volume discount to a lot of their dealers. Every dealer has that thing, if they are meeting a certain target, they get a volume discount or they get a price reduction which is effective over all the supplies made during that year. So that's an important consideration which an OEM supplier will have to do while recognizing revenue. Transaction price allocation, again depending upon performance applications kis tarah se hai. And a principal versus agent concept was also whether he's supplying, the OEM supplying goods to the dealer as a principal or just as an agent. So again, this will vary depending upon contract to contract. One has to go examine the contract minutely and then apply that 5-step model of revenue recognition and then recognize the revenue. So this is where our standard on revenue recognition 115 ends. Pritam ji, can we move over to the next standard?
Yes, sir. So there is one question. In case Ayushi, you want to take it up?
Yeah.
Okay.
Sir, there is one question. If we go in this type of recognition, income tax department won't accept for real estate company. It is the concern of the participant.
So this area I'll explain in brief, because this relates to a particular industry, and I can spend another 2 hours on just this one question only. So I don't want to do that. Just very briefly, even in income tax provisions, as of now, there is no provision which mandates that the real estate companies have to follow percentage completion method. This is a misconception. I would like to clarify it on this platform. आज के दिन all the entities are required to follow ICDS, income computation and disclosure standards. There are 2 income computation and disclosure standards. There is ICDS 3, there is ICDS 4. ICDS 3 applies to a construction contract, which is a case for a normal contractor, not for a real estate developer. So the real estate developer would apply ICDS 4. ICDS 4 says that if the contract is for supply of goods, then it has to be recognized when the risk and rewards have been transferred. And if it is a supply of a service, then it has to be done over a period of time. And with the present scenario, with RERA being there, with insolvency and bankruptcy code being there, no real estate company can say that its performance obligations has been satisfied or the risk and reward has been transferred to the customer till the date the company has delivered the flat to the customer. And just to give an insight, in 2017, May 2017, Income Tax Department had come out with a draft ICDS 11 for real estate contracts, which itself says ki, it means there is no ICDS as of now, which can be applied to a real estate contract. Which this was proved by that draft standard being issued, ICDS 11, wherein Income Tax Department had proposed for putting in revenue for taxation on percentage method, but that ICDS never got notified. So as of now, there is no standard, there is no provision in IT law which mandates a compulsory percentage method. I hope that I have answered it in brief, because this is something which has to be deliberated and debated in detail depending upon the facts of the cases. And again, a certain stands need to be taken with the department. Now, we have been doing assessments for a lot of our clients as well who have been following completion contract method, and it has been accepted by the department.
Yeah, sir. Thank you. One more question. Can you please summarize the allowed revenue recognition methods under Ind AS for real estate companies?
So there is no specific method per se for recognition of revenue. There are only two methods. One is either it is a percentage method or it is a point in time method. If the contract of in a real estate between a real estate developer and the customer is that it fulfills either of the three criteria. If this is being fulfilled, then it's a fit case for percentage completion method. And if it is not there, then it is a completed contract method. One has to see when is the customer obtaining the control. A typical example would be when the customer is actually taking a physical possession of that flat. That is a time when the risk and reward is getting transferred, or a control is getting transferred from the entity to the customer. That is a point if the company is following completed contract method. If the contract is such that it is following percentage completion method, then percentage completion method में there is that एक जो traditional concept पहले भी होता था, one needs to estimate what is the percentage of work done, and then based on that proportionately revenue has to be recognized.
So one more point is practically percentage completion no longer applicable for real estate company.
If you ask me, the answer is yes, but there are still companies who follow it percentage completion method. Maybe they might be having certain provisions in their contract wherein this might be happening, and plus there might be certain cases. It is not key. It can vary from contract to contract as well. There can be, let's say there can be a case. Let's say there is a real estate company which is developing a project also, real estate project also, and in certain contract it might be acting as a pure contractor also. So for that project wherein that company is acting as a pure contractor, obviously he will go for the percentage completion method. If it is a real estate project for a flat, generally, to my knowledge, all the big listed companies you talk about, DLF, Shobha, Prestige, you name anything, Brigade, Godrej, everyone have shifted to the contract completion method.
Okay, sir. Thank you. You may proceed.
So coming to the next standard, Ind AS 116 leases. It replaced Ind AS 17, and again it brought in I would say a revolutionary change for certain industries, but definitely a change and a big impact for all the companies, because lease is something which generally every company might be entering into in some form or the other. The magnitude of that impact might vary depending upon industry to industry, but it brought a complete shift in the lessee accounting after its implementation. So it was the standard was effective from 1st April 2019. So 19-20 financial year was the first year wherein the standard was applied. From a lessee point of view, so अभी तक हम जितना IGAP पढ़ते थे या Ind AS 17 पढ़ते थे, one basic thing which we used to study in leases was that there are two types of leases. One is a finance lease and one is an operating lease. So that concept, it is still there in Ind AS 116, but that concept is redundant from a lessee point of view. From a lessee, there is a single way of accounting for all lease transactions, barring a few carve-outs. But whatever be the form of that lease, you need not go into that bifurcation that whether it's a finance lease or operating lease. And due to this, there's a huge substantial impact on a balance sheet, PL cash flow presentation, as well as certain financial parameters. We will see three sectors which we feel were substantially impacted: was aviation, telecom, and retail logistics. I'll explain how at the later part in my presentation. So coming to the scope of Ind AS 116, if we see Ind AS 116 applies to all lease transactions for all assets, including a sublease. So it is not just that it will apply for a land and building, a typical land and building lease. It applies for all assets. It can be a vehicle lease, it can be machine taken on lease, it can be DG taken on lease, it can be furniture taken on lease, it can be anything and everything. And it also captures sublease concept, except cases which have been dealt by different standards, or like the leases to explore or use minerals, oil, natural gases, leases for biological asset, and there is a separate Ind AS 41 for it. Service concession agreement, which is covered by Ind AS 115. So what is service concession agreement? Is basically your typical highways which are constructed by private on BOT, build, operate, transfer model. That comes under the service concession arrangement. So Ind AS 115 has a detailed guidance on how those service concession arrangement revenue need to be recognized, and hence it is out of Ind AS 116. Licenses of intellectual properties, which is again covered by Ind AS 115, so it is out of this lease standard, and again rights under certain licensing arrangements, which is covered by Ind AS 38. There are just, so when we see from a lease point of view and exemption point of view, there are just two exemptions which are there on which this standard would not apply. In all other cases, which are within the scope, which are other than these 5 items, this standard would apply. Now, what are those two exemptions? One exemption is a short-term lease. What is a short-term lease? A short-term lease which has a lease tenure of 12 months or less. So that is that election can be made by way of an entire class, or it can be made on a lease by lease basis also. So the standard gives full flexibility for that. The choice is of the entity whether it wants to take a election for a whole class or on a lease by lease basis. But any lease which qualifies for a tenure of 12 months or less will qualify as a short-term lease, and you need not apply the principles of which are given in Ind AS 160. Now coming to an example, let's say there's a company which has taken a factory premise on lease for manufacturing a particular part. The cost of installation of the machines is not significant. The lease term is 11 months non-cancelable period, after which the lessee gets a right to terminate the lease without any penalty, whether this lease will qualify as a short-term lease or not. Anyone would like to answer or give his views on it? Whether we can say it is a short-term lease or not.
Short-term lease, one of our participant answers that it's a short-term lease.
So upfront, it is a short-term lease, but the answer is not that simple. We will need to consider few other aspects as well. If there is a certainty, if there is a reasonable certainty that the premises will be used beyond 11 months, and the lessee will not exercise its cancellation right or the termination right, then the lease will not qualify as a short-term lease. So a lot of judgment again would come into factor. I have given this line in the illustration: the cost of installation of machine in the factory is not significant. Again, these things also has a bearing. Let's say if it would have been a case wherein there would have been a substantial investment in the machine, then one would see ki generally thus the right not to terminate would be exercised or not. So there are factors. One has to go beyond that non-cancellable period to really determine whether it's a short-term lease or it doesn't qualify as a short-term lease. The second exemption here is leases for low value underlying assets are not covered by this Ind AS 116 का जो normal revenue recognition का principle है. Now, what do we call as a low value underlying asset? Let me first make it clear that for taking this exemption, there is no concept of materiality. A particular asset may be low. One can argue that a particular asset may be low value for a particular size of company, may not be a low value for another size of company. But standard disregards that materiality concept. It says that low value has to be determined based on the absolute value. If that absolute value is low, and with what we compare with the cost of the, if you were to buy that new asset today instead of taking on lease, what would have been its value? So based on that, you determine whether that asset is a low value or a non-low value asset. Examples are very small items of furniture, let's say computers. Those can be taken as a low value asset, but still again, it has to be seen based on case-to-case basis. We'll cover the illustration here as well. Let's say there's a store which has taken 500 separate LED lights on rent, and the value of each LED light is 2,500 rupees per LED. The whole lighting units are wired up, and the entity can benefit from the use of the whole lighting system rather than the individual unit. Whether this lease will qualify as a low value lease or not. Again, any participants who would like to take a try for this?
Yeah, they are saying that qualify as low value.
There's a catch in this question. It says that the whole lighting units are wired up and the entity can benefit from the use of the whole lighting system. So this LED cannot be used as on a standalone thing. It is as a whole lighting system. So obviously, if it would have been used individually, the pricing would have been 2,500 low value. It qualifies for exemption. If you see as a whole, 2,500 into 500, it doesn't qualify for a low value exemption. So again, you will have to see on a case-to-case basis the usability of the how the entity is using that asset. Based on that, you need to take a decision whether it qualifies as a low value or not. The accounting for these two exemptions, short-term lease and low value asset, the lessee would recognize the expense as a normal rent expense on a straight line basis, or if he feels that any other systematic basis would represent the pattern of the benefit, then on that basis the entity can recognize revenue. Otherwise, it's the basic principle is straight line basis as a rental expense, it will be accounted. Now we come to the after examining what exemptions are there, we come to a contract and how do we identify whether it is a lease contract which comes under the ambit of Ind AS 116 or not. So what is a lease contract? A lease contract is something if it conveys the right to control the use of an identified asset for a period of time and in exchange for a consideration. So the lessee has to be in a position to control the use of the identified asset. How can he be in control? A, he should be in a position to get the economic benefits by using that asset, and he should be in a position to direct the use of the asset. So here, if we see, it is not the right to control an asset, which was there in Ind AS 115. It is here the right to control the use of an asset, and it is use of an identified asset. Why I have given stress on an identified asset? I'll give you an example. Let's say an entity says contracts with a particular vendor that it needs a Hyundai Creta for lease for 3 years for one of its employees. The vendor has identified a particular model of the car, specific car, it has given on lease for 3 years. This case would come under the definition of a lease and would be covered by Ind AS 116. Now let's say there's a second scenario wherein the entity says to the vendor that I need Creta for 3 years. You give me any model, any car, and the vendor has a choice. He might send one particular car on a particular day. He has an option to send another car as per his option, as per his availability. So here there is an absence of an identified asset. There is an absence of a specific asset, and hence that contract would not qualify as a lease contract for accounting under Ind AS 116. Now, another important aspect while determining a lease contract is we come across a lot of contracts which is a composite contract. There is a lease component as well. There is a non-lease component as well, which is included. Typical examples: we have taken a flat on rent, including maintenance. That's the case wherein we are paying a certain consideration for actual rentals, and we are paying a certain consideration towards maintenance as well. Another example is a wet lease of a particular equipment. Let's say an entity has given an equipment on lease, plus is also operating it, plus is also maintaining it. So there are 3 components which is there in that contract. One is the lease of the equipment, another is the operation of the equipment, and third is the maintenance of that equipment. So the standard generally says that you need to segregate lease as well as non-lease components. And then lease components have to be accounted as per Ind AS 116, and non-lease components have to be accounted as per normal accounting practice. Now, how do we segregate lease and non-lease components? Similar concepts which we discussed in Ind AS 115. Identify what is the separate lease component, identify the separate non-lease component, take out the total consideration. On a standalone pricing basis, allocate the consideration. So if you would have given on the lease component separately, what would have been the consideration? If you had given the non-lease component separately, what would have been the consideration? Compare the standalone basis with the total consideration, and then on a pro rata basis allocate it. However, in the end, the standards comes with a practical expediency. It says it is an election which the lessee may take, wherein it may elect not to separate the lease component from the lease component, and in that scenario the entire contract will have to be accounted for as a lease component. But if the lessee is electing that option, it will have to make suitable disclosures for it. So whatever we discuss, it is just summarized in this flow chart. Whether there's if all these parameters have to be fulfilled. If there is an identified asset, no, then there is not a lease contract. If there is an identified asset, then we need to see whether the customer has is in a position to take the benefits from the use of the asset. If no, then again it is not a lease contract. If yes, then the customer is in a position to direct the use of the asset. If all the 3 parameters are fulfilled, then it's a lease contract. How do we determine the lease term? This is one of the important principles. There are certain judgment calls which need to be taken. It generally says there are 3 aspects. Number 1, non-cancelable period of lease, wo to definitely lena hi lena, that is the lease term. Then the period for which there is an option to extend. So typically kai baar hota hai when you enter into a lease for 3 years, which is further extendable by another 3 years. So if that option to extend is there and the entity is reasonably certain that option will be exercised, then that extended period will also need to be considered. And and there is a certain period wherein there is a termination right, and the entity is certain key the termination right would not be exercised and it will be in a position to use that asset, and that also would be included in the lease term. If there is a lack of certainty, the entity may exercise the option of the termination, again based on various other factors as well, then that period will not be counted in the lease term tenure. So again, there's a judgment call which needs to be taken based on the contract, based on the situation, and whatever judgment or call is taken, that has to be adequately disclosed in the notes to the accounts. Now we move to the most critical part, is the lessee accounting. Once we have identified the lease, we have identified the lease term, and this is the area wherein there is the substantial change from the earlier gap, or I would say a complete change from the earlier accounting methodology. Lesser accounting, there is not much change. So once you have identified a lease contract and you have determined its term also, हम पहले IGAP में क्या करते थे, हम पहले उसको अलग अलग करते थे, whether it is a finance lease, whether it is an operating lease. Finance lease होता था तो हम उसकी एक separate एक particular set of accounting होती थी wherein you used to account, the entity used to account for an asset, and the accounting for operating lease was very simple current account debit to bank account, खर्चा बुक करो, PL impact है on a straight line method. That was the earlier IGAP accounting or Ind AS 17 accounting for a typical operating lease. Ind AS 116 says that irrespective of the lease, any lease contract which covers under which gets qualified as a lease contract under Ind AS 116 and doesn't qualify for the exemptions, on the date of commencement of the lease, a asset will be created, right of use assets, and a liability will be created. So अभी तक जो खाली एक PL item के through flow करता था, now there is a balance sheet item as well, which will now appear in your balance sheet. There will be an asset which is called right of use asset, and there is a liability which is called lease liability. Now, how do we determine the lease liability, or how we measure that lease liability? So it simply says whatever is the lease, so whatever payment is to be made over the lease term, उसका present value हमको निकालना है. That is the lease liability, which we need to measure upon initial recognition. While taking while determining the lease payment which the entity needs to make over the lease term, one has to consider if there is any fixed payment of lease. There can be variable payments. There can be a guaranteed payment ki after a certain thing the lessee will buy the asset for an X value. If that is there in the contract, then that also needs to be considered. So whatever payments are made or are expected to be made by the lessee to the lessor over the lease term, we need to calculate its present value. Correspondingly, we will be accounting the right of use asset. Right of use assets will be accounted for at cost, and the principles of Ind AS 16 property, plant and equipment would be very much applicable to these assets which we account under Ind AS 116. The various components of right of use asset is number one, lease liability. So whatever liability you have accounted as lease liability, definitely corresponding debit would be done to a right of use assets. Additionally, right of use asset mein there are few additional items which again come. One is, let's say before commencement of the lease, you have made certain advance rental payment of lease, or some other lease payments we have done. So that will also come under right of use asset. Any initial direct cost you have incurred, let's say आपने एक property rent पे लिए, उसका एक stamp duty pay किया है, so that is an initial direct cost, which that will be capitalized to this right of use asset. And just like PP Ind AS 16, an estimated cost of dismantling and restoring at the end of the lease tenure, if there is a reasonable certainty that the lessee will have to incur certain cost for dismantling and restoring the site, then a provisioning for that also needs to be done. हमने जो प्रेजेंट वैल्यू की बात की थी, प्रेजेंट वैल्यू कैलकुलेट करने के लिए जो डिस्काउंटिंग रेट स्टैंडर्ड बोलता है, it says two things. Number one, it says either you take the interest rate which is implicit in the lease, or you take the lessee's incremental borrowing rate. Now, what are these two rates? Interest rate implicit in the lease simply means the rate at which the present value of the lease payments is equal to the fair value of the asset. So आज के दिन there is an asset जिसकी fair value 1 लाख रुपए है, and that asset commands a lease rental of, let's say, 5,000 for next 3 years. So the rate at which that payment stream is equal to 1 lakh, that is the interest rate which is implicit in the lease. If you can determine that, we will have to use that as a discount rate for calculating the present valuation. If that is not possible, then one has to refer to the lessee's incremental borrowing rate. Now, what is lessee's incremental borrowing rate? By lessee's incremental borrowing rate, we mean that, let's say, instead of taking that asset on lease, the lessee would have purchased that asset and would have taken a loan for purchasing that asset. So what is the borrowing rate which the lessee would have paid for that class of asset? Is the lessee's incremental borrowing rate which the lessee will need to determine and use as a discount factor. Now, this is the accounting which we do on an initial recognition of the lease. Now, what is the subsequent measurement? How do we, once let's say आपने accounting कर दी उसकी lease की initial inception में, how do we account it going forward? Right of use asset में you will apply the normal cost model which is there in Ind AS 16 PPE. The asset would be recognized at cost, less depreciation, less impairment, plus if there is, let's say, any remeasurement event happening in the lease, then that adjustment for remeasurement, and the depreciation would have to be done over the lease term. There is again one method which is an optional method. Let's say the asset which is taken under lease belongs to a particular class of PPE which the lessee is already revaluing as under Ind AS 16. So the lessee has an option for that right of use asset also. The lessee can elect the revaluation option. So there will be, on a year-on-year basis, there will be a depreciation cost which will be recognized, and a right of use asset will keep on reducing over the lease tenure. What is the subsequent measurement for lease liability? Lease liability every year on year will increase the lease liability by accounting for expenses, for interest expense. So how do we account for the interest expense? Using the same discount factor by which one has determined the present value. We will, on the principal value, on that present value, year on year basis pe, the entity would recognize interest expense and the lease liability would increase by that interest amount. Secondly, whatever lease payments or the actual rentals which the lessee is making, it will keep on reducing the lease liability by that amount. Plus, if there is any remeasurement, if there is any lease modification due to which there is a remeasurement event happening, then that lease liability will be affected by that figure. Now we come to an example to understand this concept. This is a very important concept here. So kahin pe you want me to reiterate, I'll happy to do that. So we see this example, a simple example. An asset is taken on lease for a 5-year tenure, 1 lakh lease rent per month for a 5-year tenure, and an incremental rate of borrowing is 11%. Nothing, no other initial cost, nothing else. So the total payment which is to be done over a 5-year tenure, that is a 60-month tenure, is 60 lakhs. उसकी हम present value निकालते हैं at 11%. The lease liability present value would come as 45,99,303. Since there are no other elements and rate of cost of ROU, so the ROU would also be accounted at the same amount. So you will simply pass, the entity will pass a simple journal entry, rate of use asset debit 45,99,303, to lease liability 45,99,303. So जैसे ही ये लीज कॉन्ट्रैक्ट स्टार्ट हुआ, एट द कमेंसमेंट डेट आपकी बैलेंस शीट में एक असेट खड़ा हो गया, एक लाइबिलिटी खड़ी हो गई, एंड दिस यू विल हैव टू डू फॉर ऑल द लीजेस. Subsequently what you will do, number 1, ये जो 45,99,000 का हमारा राइट ऑफ यूज असेट था, we will depreciate over a period of 5 years. So year on year there is a depreciation expense of 9,19,861. Secondly, lease liability के ऊपर we will be accounting interest expense at the same 11% discounting rate. You will see this interest expense will keep on reducing as we move towards the contract, because initial year the principal is maximum 45,99,000. You will apply 11% on that entire principal. So what will happen in the principal 45,99,000, you will add this 469,839. You will deduct this rent expense, rent paid of 12 lakh. You will get a principal, closing principal. Then again next year, year 2, on that closing principal, interest at the rate of 11% would be accounted. It will be 3,85,000 minus lease rental, then a closing balance of that lease liability, and so on and so forth. So definitely as the principal is reducing by virtue of lease payments, the interest would keep on reducing. So under this method, there is no rent expense in your books, in your P&L. Instead, there is an interest expense and there is a depreciation expense. This is the major change which I was talking about initially, कि अब rent बोल के तो आपकी PL में खर्चा ही नहीं आएगा, चाहे कितने ही करोड़ों का खर्चा हो आपका. What we see, if you see over a period of 5 years, you are paying a rental of 60 lakhs. If you sum up interest expense of 14 lakhs and a depreciation expense of 46 lakhs approximately, the total would come to 60 lakhs over a 5-year tenure. On a year-on-year basis, there definitely will be a difference. Initial years, अगर आप rent की तरह counting करते हैं under old standards, उससे ज़्यादा एक certain खर्चा होता. In the initial years, the expense or the charge of to the PL would be higher, and this will keep on reducing. So this formula or this core principle will be true for all leases. So by virtue of shifting to this lease in initial years, your profit would be lower by an amount if you would have been in the earlier standard, and the situation will reverse as and when the timeline goes on. But in the net, at the end of the tenure, at the end of the 5-year tenure, this difference would be zero. That the sum total of interest expense and depreciation would be equal to the actual rentals paid. Same way, journal entries or depreciation to right of use asset, finance cost to lease liability you will account for, and finance cost to lease liability to payment. Now, once we have seen this example, now we understand how it has impacted the financial statements of companies with the standard coming into this. Number 1, if it would have been a typical operating lease, in earlier standard, it would have just affected the P&L of that entity. There is no impact per se on the balance sheet of that entity. Now, you need to recognize an asset, you need to recognize a liability, which will on an overall basis increase your balance sheet size, and especially to those industries wherein a major high value assets are on lease, their balance sheet size would balloon up. Secondly, as we discussed, rent का expense अब आएगा नहीं P&L में. Instead, there will be a interest cost and a depreciation cost, which cumulatively would be higher in initial years. Now, one important thing which will happen, instead of accounting as rent, you are accounting as interest and depreciation. So your EBITDA, earnings before interest, depreciation and tax and amortization would increase. Because पहले क्या होता था, अगर आप रेंटल की तरह काउंटिंग करते थे तो EBITDA कैलकुलेशन में वो माइनस होता था. अगर आप उसको इंटरेस्ट एंड डेप्रिसिएशन के लिए कैलकुलेट कर रहे हो तो वो आपके EBITDA के कैलकुलेशन में नहीं आएगा. So consequentially, EBITDA of this company would increase, of any company would increase by switching over to this standard. From a cash flow perspective also, rentals were always accounted as an operating cash flow activity or as an operating activity. However, Ind AS 116 says that whatever interest and principal of lease liability which the entity is paying, cash payment for that would qualify as a financial activity. So what is the impact of this? Your operational cash flows have increased and your financial cash flows, financing activities cash flow has reduced. This is what is the impact of this switch over to this accounting standard. And naturally, with increase in EBITDA and other things, liability increasing, ratios would also change. EBITDA percentage would change. Then this lease liability is also considered as a debt, so your debt equity ratio would change. Interest expense has now increased in a normal scenario as compared to ICAI. So interest coverage ratio would also change. So these ratios would also change substantially in few cases, and in few cases might not have a material impact. When we talk about presentation, balance sheet mein, there is a right of use asset which is disclosed separately from other asset. There is a lease liability in the liability side which is disclosed from other liabilities, separately from other liabilities. In P&L, there is an interest cost which is disclosed under finance cost head. There is a depreciation on right of use asset. When we talk about cash flow statement, as I told earlier also, lease ka principal payment, cash payment and interest for it will qualify as financial activity, and payments for short-term lease and those low-value asset lease would still continue to be accounted as an operating activity. I'll quickly touch upon this lease modification concept. The lease modification, somewhat principles are imported again from that Ind AS 115 concept. If there is a modification in the lease, after the lease has commenced, there might be change in the tenure, there might be change in the pricing, there can be anything. So you need to determine whether that change or that modification has to be taken as a separate lease or it has to be taken as a not as a separate lease. So if there is an increase in the scope of the lease by adding of few assets and that addition is at standalone price, then it is a separate lease. आपने एक एंटिटी ने पहले कॉन्ट्रैक्ट किया था मेरे को 5 गाड़ियां रेंट पे देना at a certain at 1 lakh per car, or let's say 20,000 per month, five cars. So for a composite contract of 1 lakh, it says ki now after a while it says ki I need 3 more cars at 20,000 per month only. So that's a separate contract because the increase is reflecting the standalone prices. If the increase is not reflecting the standalone price, then there is a need to remeasure the lease liability and also adjust the right of use asset. So taking that example forward, there were 5 cars for 20,000. We have taken 3 more cars, so now there are 8 cars. The entity renegotiate and says ki for 8 cars, we will cumulatively pay 1,20,000 at the rate of 15,000 per car. So there is a modification. So it is not at standalone prices. So we need to remeasure the lease liability. We'll have to, as if the old contract has terminated for 5 cars and a new contract for 8 cars has come into picture. Same concept जो कि है ना contract modifications में था Ind AS 115 में. And if there is a decrease in the scope wherein let's say a contract has been terminated midway, then the lease liability and ROU asset would be extinguished, and if there is any difference, if there is a partial or a full termination, if there is a gain or loss, that gain or loss would be recognized in the P&L. Do we move forward for the lesser accounting? Any questions for lessee accounting?
Yes, sir.
That is where the change is.
Yeah, so there is one question. If it is an operating lease for the lessor, so he will also take depreciation on that asset, and also for the lessee, he will record right to use asset and take depreciation. So is it really fair method as both are taking depreciation in their books on the same asset?
Oh, see, this is how the opinion is divided. The opinion of the gentleman who has posed this question, that's also correct, but there is other way of looking at. I'll give you an example of an aviation industry. Now, what is the biggest asset for an aviation industry? Ayushi, if you would like to answer, what is the biggest asset for an aviation industry? It's the aircraft which it takes on lease. The lease payments for those aircrafts runs into crores and crores. And what used to happen was generally one could not gather the strength of the company based on the P&L method of those aviation companies. If I talk about those companies have benefited substantially by reflecting in their balance sheet that aircraft as an asset, and by showing their strength, whether they have a fleet of 100 aircraft or whether they have a fleet of 200 aircraft or whether they have a fleet of 50 aircraft. Also, again, taking an example of aircraft industry only, there is one company who used to take aircrafts on finance lease model. वो क्या करता था? Asset की तरह recognize करता था. There is a separate different company which used to take those aircrafts on, let's say, on a operating lease model. तो P&L में करता था. Now, how would you compare both the performance of both these companies? There was again a disconnect to compare the performance of these two companies. So one can always argue that this may not be a fair method, or this is not giving the true and fair view, true correct picture. But there are other counter arguments to that as well. Some are in favor of this accounting, some are not in favor of this accounting. Some feel, I have met multiple people, some clients of ours feel that it is just something which is overburdening their accounts and ballooning up their numbers and not giving a true and fair view. But some feel otherwise as well. So it would completely depend on the business model of the company and the industry switch into it. Should you proceed?
Yes, sir.
So lesser accounting, substantially no change as जो पहले था. From a lesser context, you first need to see whether that lease is a finance lease or whether it is an operating lease. If the lease has an effect of transferring substantially all the risks and reward which are incidental to ownership, it is a finance lease. If it doesn't do that, it is an operating lease. And again, this is purely a matter of contract, wherein one needs to examine the contract in detail to examine whether the risk and rewards are getting transferred, the risk and reward of the ownership are getting transferred. These are few indicators, again, not an exhaustive list. If the lessee has an option to purchase the assets at a lower value than the fair value, or automatically the ownership of the asset gets transferred to the lessee at the end of the lease term, then it is a finance lease. If the lease term is for the majority part of the economic life of the asset, so basically the lessee is only enjoying the asset for the majority life, then it is a finance lease. If the lease payments, present value of the minimum lease payments is more or less equal to the fair value of the leased asset, then it is a finance lease. So these are few indicators which can indicate either on a standalone basis or in conjunction that there is a finance lease which is there. But and one has to really look into the substance rather than the form. So one has to see whether the nutshell is the risk and reward significant relating to the ownership is getting transferred from the lessor to the lessee. If yes, then it is a finance lease. If not, it is an operating lease. Accounting, if it is an operating lease, simple, that asset is recognized as an asset in the books, whatever is the form. Let's say if it is a building, it is recognized as a building. If it is a vehicle, it's recognized as a vehicle. Depreciation would be claimed by the lessor. Lease payments, which is recognized as an income. Initial direct cost which he might incur would be recognized over the lease term, and then it is subject to impairment testing. If it is a case of a finance lease, asset per se is not recognized. Instead, the lessor will recognize net investment in lease, and it will be a financial asset which would be covered under the ambit of Ind AS 109. उसका जो भी de-recognition principles है, impairment principles है, and finance income would be recognized over the lease term, because Now it has really translated into a financial instrument wherein the lessor has a contractual right to receive payments over the period. Transitional provisions approaches, again similar to transitional method which we discussed in Ind AS 115 also. One is full retrospective method wherein you have to apply the principles of Ind AS 8. You will have to, as if let's say the effective date of this standard was 1st April 2019. Let's say a contract had commenced on 1st April 2017. So the entity will have to apply, if it chooses for the full retrospective method, as if Ind AS 116 would have been applicable right from the commencement of the contract, that is on the first day of 1st April 2017. In that case, comparatives would have to be restated, a third balance sheet would have to be prepared, and the difference of lease liability and right of use asset as at the beginning of the earliest reporting period would have to be adjusted in the reserves. The second approach is similar, modified retrospective approach. इसमें while calculating lease liability, instead of retrospectively applying it, you determine what are the lease payments which are pending to be paid after the date of initial application. You discount that using an incremental borrowing rate. Right of use asset you might choose same as lease liability, or there is an option as if you would have applied it since commencement, what would have been the value. So it is a choice at the option of the entity. And if there is any difference between ROU asset and a lease liability, that difference would be adjusted in the retained earnings of the earliest reported period, and comparatives would not be restated. So again, the financial statements of 1920 would not be comparable to financial statements of 1890 to that extent if an entity follows modified retrospective approach. And actually, if you ask me, this is the method which majority of the companies have followed in the listed space. So I'll quickly run through 2 or 3 examples just to give you more insight, real life examples, कैसे impact किया था, कहाँ यहाँ major impact है. I think then one can understand and then again recapitulate that fair value concept, whether the true and fair view is being reflected in the balance sheet or not. So I'm sorry, the figures are very, very small. I had to paste the entire balance sheet on it. So we take up the aviation sector, which we were talking about. One of the biggest companies is Indigo Airlines, Interglobe Aviation. The numbers are in millions. So if you can follow the cursor, if everyone can follow the cursor, I'll try to explain what I want to highlight here due to this change. So Interglobe Aviation had followed the retrospective method. So hence one can see that there is this right of use asset of 14,000 odd crores against which the comparative value is 0. So these two numbers are not comparable to that extent. So if one looks at 2019 balance sheet and it is 25,000 crore balance sheet, which has ballooned up to 42,000 crores. So there's an increase of 17,000, out of which this increase of this 17,000, 14,000 contributor is right of use asset. So one can say out of this 42,000 crore total asset, 1/3 value तो इस right of use asset की है, जो कि कभी इसके बैलेंस शीट में आती भी नहीं थी पहले. तो this is one area one can really say कि, and these are huge numbers from a balance sheet context. 1/3 of your balance sheet item, 14,000 crore out of 42,000 crore. If we compare 14,000 vis-a-vis 25,000, it translates to almost 60% change increase in the asset value due to this item, right of use asset. इसका correspondingly हम liability देखते हैं. तो there is this lease liability which is there in the current portion as well, 15,000 crores, and it is also there in the this is non-current portion, 15,000 crore, and another 6,000 odd crore in the current portion as well. So it has a lease liability of 21,000 crore. Second example, sectoral example again, wherein major impact can be seen again purely based on business model. This is the balance sheet of future retail, Big Bazaar वगैरह जो है, everyone must be aware of it. Future retail का business model क्या है? It takes up all retail outlets on lease, majority of those lease outlets on lease. So it can be retail. We can replace this example with a logistics company which take warehouses on lease. So if we look at this balance sheet of future retail, again But just to highlight, right of use asset has come 1600 crore. This is the balance sheet which is in crore. Now for future retail we see the PL. If you see this finance cost expense, one can see the cursor. The finance cost in 2019 was 224 crores, and again future retail has used modified retrospective approach, so the comparatives are not comparable, because there is no Ind AS 116 in 19 and there is 116 in financial year 20. So this finance cost from 200 odd crores has increased to almost 1000 crores. Similarly, depreciation expense has increased from 100 crores to 1000 odd crores. If we just look a small table I have pulled out from this future retail financials, turnover level आप देखिए 2 सालों में it's more or less same to 20,000 odd crore, 20,164, it is 20,118. EBITDA was in 2019 was 1000 crore, which has increased to 2000 crore. So EBITDA has simply doubled up. From a 5% EBITDA, it has increased to a double-digit EBITDA of 10%. Rental expense has increased from 1500 crore to 109 crore. So this is a major expense for this company. If we look at the overheads, or let's say other expenses of last year, if we see 3200 crore, almost 40% is a rental expense. So it denotes the major expense which this company incurs on this account. This has reduced drastically to 100 crores. In place of that, there is depreciation has increased from 100 to 1000, and finance cost has increased from 200 to 1000 odd crores. So this is again another typical example of wherein this standard had a substantial impact on the way the balance sheets are presented, the way P&L is presented, the way the ratios are determined, the way one looks at the balance sheet. Just before wrapping up, another third example, another sectoral example is a telecom industry. Telecom industry में जो telecom companies के जो towers होते हैं, these are majorly taken on rentals. Again, with this Ind AS 116 coming into picture, there's a substantial asset which have come into the balance sheet of company. May not be as substantial as if you compare with a aviation industry, but definitely substantial if you compare it with any other industry. So there is this right of use asset which has come into place, and again if you see the P&L, depreciation, EBITDA percentages have increased, depreciation cost has increased, finance cost has increased, and the rental expense has reduced. So this is the real life examples wherein this standard had a major impact. So this is what I had from my end.
Thank you, sir.
Anything else? Any questions? Or maybe if there are questions, moderators can compile it, mail it to us. We'll definitely revert on all the queries.
Yeah. There is one question. Suppose now this right of asset are derecognized due to termination or any other reason. So the next financial statement again will show huge deviation.
So here what will happen? So what will happen on a termination? What really would happen if a right of asset is derecognized? Corresponding adjustment of lease liability is there, because lease liability is also derecognized, and the net impact of these two would only go to the P&L. So अगर आप कभी कैलकुलेशन करोगे तो जैसे मैंने एक एग्जांपल दिया था कि in initial years, if I go to that example, say here, so in initial years I had shown that there is this difference wherein the charge in P&L is higher compared to the actual outflow. Let's say after year 2 there is a termination. अगर आप कैलकुलेट करोगे इस एग्जांपल में, तो जो 2 सालों में आपने एक एडिशनल चार्ज ऑफ किया P&L में, सिर्फ उसी का रिवर्सल होगा, because that extra charge of was in any which case was getting reversed over a period of time, over the next 3 years. So if there is a termination, this additional charge would, or instead of over a period of time, it will get reversed in a single shot. So I don't think so there will be a major deviation, because there is not If there is a write-off of an asset, that there is not write-off of a right-of-use asset, that there is a derecognition of right-of-use asset with a corresponding derecognition of lease liability, and only net impact is shown in the P&L, be it a gain or be it a loss.
Thank you, sir. Sir, मतलब बहुत ज़्यादा comments are a great session, informative and all. Really a nice session. Now I would request Puneet Ji, member of Gyan Ki Baat, to present vote of thanks to our speaker.
Puneet Ji, you are there? I think so. Ayushi, you can continue. You would be the right person to give vote of thanks.
Thank you very much, sir, for enlightening all of us with your knowledge. The way you were explaining everything is really appreciated.
Hello, sorry.
Yeah.
Some network की problem आ रही थी, Peter.
Not an issue, sir. Not an issue.
Sorry for that. आप लोगों को अब मेरी वीडियो भी नहीं चल रही क्योंकि नेटवर्क की प्रॉब्लम है. So I am on behalf of Gyan Ki Baat and AFTP and the entire CA fraternity, and on my own behalf extend a very hearty vote of thanks to all speakers for gracing our important work and sharing us finding and operations throughout this course. I may like express our sincere thanks to CA Abhishek Gupta for giving an excellent coverage on Ind AS 115 and 116. Finally, I would like to take this opportunity to place on our heartiest thanks to Gyan Ji and my dear brother CA Peetam. You are doing tremendous job, Peetam, for perfectly planned webinar. What an interesting topic you have chosen. I cannot thank everyone enough for their involvement and their willingness, but I am really thankful to our participants. Without them, it cannot be dreamed. Once again, I want to state that we are almost grateful to all speak on this stage. We thank you for being with us this evening. It has been great pleasure to us. Thank you very much to all of you. And Peetam and Ayushi, you are doing very wonderful job. Peetam, आप बहुत ही अच्छा काम कर रहे हैं और करते रहे. हम लोगों का साथ और हम लोगों का वो सबका साथ सबका विकास. Abhishek, very much thank you to you.
Great session by Abhishek Ji. Do join us tomorrow for the last day of this long series, friends. So we shall be waiting for you for tomorrow. Thanks a lot.
Thank you, everyone.
Thank you.